The US jobs report, what's it mean for stocks going forward, Pete?
Well, Pete, looking at this report, and I'm going to say, when you think about what we've been trying to understand over the last year or so, it's kind of hasn't been like a year of living dangerously, but more like a year of living patiently. We're patiently waiting for inflation to fall. We're patiently waiting for the job market to show that those interest rate rises, both in the US and here, are starting to work to bring inflation down. But on Friday, the Yanks got 272,000 jobs created in May. Economists only expected 190,000. Unemployment did increase from 3.9 to 4%, but average hourly wages went up as well. So you have to call this a hotter than expected report. Now, as a consequence, bond yields went up. And when bond yields go up, stock prices go down. So we now have to wait, hold our breath until later this week when the Yanks will get a CPI, an inflation number. And that's going to be the next thing we have to patiently wait for. And I guess we're all keeping our fingers crossed that they actually show that inflation is falling in the US. If not, stock prices will probably fall.
Okay, so the big market movers, what should we look out for this week, Pete?
Yeah, so without doubt, the first one is the CPI in the US. Now, that's released on Wednesday in America, but we'll get that on Thursday morning. Then on Thursday morning, our time, later on in the morning, we'll get the latest jobs report here. And once again, we want to see unemployment rise if you want to think that the Reserve Bank will back off from even talking about an interest rate rise. So they're the two big stories of the week. They'll have big impacts on the central banks, both in the US and here, and ultimately have a big impact on stock prices in both countries.
Okay, Peter Switzer, the founder of the Switzer Report. Appreciate it, Pete. We'll talk to you soon.